Hey, you guys, it's Tuesday, 12 o'clock Central. It's time for another episode of Anything But Average, Achieving Success in Life. I got my good friend Helen Robinson with me today. We got some info for you guys. So I hope you all are listening. I hope you got some notepads out and going to take lots of notes because Helen's got some really cool things to share with everybody. Hi, Helen.
Hi, how are you?
I'm great. Thank you for doing this with me.
Of course.
Now, I always like to, because of course this goes out across all social media platforms. We have a lot of real estate agents that watch and a lot of just consumers that watch the show. And so I like for everybody to kind of know a little bit about you first. So if you could kind of tell everybody where you are, what you do for a living, how long you've been doing it, please.
Absolutely. So I'm out of the Austin, Texas area, at Cedar Park. I'm a certified mortgage advisor and run a branch here for AmeriFirst Financial, I have been in the mortgage business for a little over 16 years and help people every day in terms of, buying and selling homes, partnering with the realtors that I work with, so on and so forth.
Okay, so now for anyone that has never heard of AmeriFirst, how long has AmeriFirst been around?
So AmeriFirst as a company has been around now for over 25 years. We're a massive company, but not one that you would hear about on mainstream media because we're a mortgage company. So not like Bank of America or Wells, they're pursuing, retail banking, right? And we just do mortgage banking. So our name is mostly familiar to just people who work in the industry.
Okay, so is AmeriFirst only doing business in Texas or is this a nationwide thing?
Not at all. So nationwide, we're expanding. We do business now in over 29 states, and it just depends where we have branches. We have physical branches, but then individual loan officers that are licensed to do business in other states other than the one that they occupy.
I love that. So if you guys are watching and especially if you're a real estate agent or lender, because I've invited lenders too, you guys know how hard it is right now for buyers to obtain properties. There's multiple offers going on properties. Basically, there's no contingency offers being accepted. You're going to pay over list price and your financing better be intact. And so with all of that going on, and that's at a national level, with all of that going on, we in the real estate industry and Helen in the lending industry have to have ways to help buyers to help them achieve their dream of home ownership. So I want to talk to the public for one, Helen, about like a couple of your programs and why they got inspired. And I want to first let all of you consumers know that I literally was with Helen last week in Phoenix, Arizona with the CEO of this company and CFO of this company hearing about this, because I'm not going to endorse something unless I hear it, see it, feel it, and believe in it. And I've known Helen for several months. We've been working with them for several months and love them, but wanted to go deeper and had an opportunity to. And so we did that last week. And when you see somebody's vision and you hear their vision, that is something that's so inspiring. And the CEO of this company, of AmeriFirst, is probably one of the smartest people I've ever spoken with and heard. He was so down to earth. He was so humble, but yet brilliant. He is giving us so many things that are coming at our industry, things we need to be aware of, things we need to be looking out for, and why he's creating all of these different products to help the consumer, to help the real estate agent, and to help the lender. So that's what's fueling the show today.
Absolutely. We do. Our goal is to strive to be the best partner and resource for the brokerages and the individual agents that we are partnered with. And part of what we've done to stay consistent with our goal is to develop some very unique products that are meant to address the competition that's in the market. And some of our agents, just flat out inability to get someone under contract if they have a financing contingency or the contingency for the sale of their home because they need that cash.
Definitely. So why don't we, if we could, let's go right into, because I know real estate agents are listening to this. So let's go right into one of the ways that working with AmeriFirst, and especially you can help their buyers achieve that.
Sure. So what we're doing, we are taking your clients through upfront underwriting and through what's called our Protect Your Transaction program, okay? Which means that we reviewed their income, their assets, their credit. We understand that they're credit worthy enough to buy a home, the difficulty being they need to get under contract, okay? So what we're doing is we've generated a program called our Cash Buyer Program that essentially you take this client who's been through upfront underwriting, they're well qualified, okay? and they are providing us with the property they wish to purchase. Okay, 123 Main Street, right? We are then purchasing that property on their behalf, so to speak, right, as a cash transaction, okay? Which means, yes, we can close in 7 to 10 days, typical cash financing terms, not a 30-day cash program. That would be irrelevant, okay? We are buying it for cash. We'll provide proof of funds, so on and so forth. What we're doing in the background, so let's say during that 10-day time frame, okay, we are continuing to process their loan so that goals would be that we're still ultimately closing their loan within around 4 weeks, typical time frames. But in the meantime, we have purchased that home for cash, and then we are having a second transaction, a second closing, where they are ultimately securing their permanent financing. So it truly removes, there is no financing contingency. In this example, there is no contingency for the sale of their home. It's a cash transaction that we then turn around and essentially sell the property back to them.
Which is super cool, and nobody else is doing that. And if y'all aren't getting the gist of what that does, number one, when a property goes on the market, especially a good one, it's going to go into a multiple offer situation. So if a seller that wants that property has a home that must sell before they can buy, they're out. They're not getting that house. And they're limited usually on their capabilities of making a solid offer because of that. So this absolutely removes that.
It does. And to give you so we actually approach it in two ways. So I gave you the example of we don't have a home to sell. We're just having difficulty because we need financing, right?
Yep.
The second example is someone who does need financing and also has a home to sell. I'm going to use this is a right now today example, a client from a different brokerage down in the Houston area. What we're doing, so they own their home, right? And they're accessing around $200,000 in equity to put down on their purchase, okay? Instead of writing their offer with that contingency, they went ahead and wrote an offer that was still contingent on financing. The agent was able to get that done, just kudos to her, right?
Yeah.
But without the contingency for the sale of their home, okay? We are purchasing their home from them for a conservative figure. What we do is we run our own desktop appraisals, okay? We're going to take 90% of that number. In this example, our number came back at $250,000, okay? Which means we'll purchase it from them for $225,000. That frees up the cash for them on August 10th to close on this transaction with their $200,000 down, okay? This is without securing a bridge loan. There are fees. We charge 1.5% of what we buy the home from them for. In this example, is like $3,300, okay? But they freed up that cash. They close on this, which solves, the leapfrog problem too, of having to move out of one home and move into another home the same day, which is awful. It's miserable, right? But they've accessed the cash, and they are only now taking out a mortgage, right, for the amount that they wish to. They're not paying mortgage insurance just to get around this. They still end up with the 30-year fixed loan that they want. So it's exciting. I mean, this is helping people, and this is just a right now today transaction that we're working on. So.
And again, this is put out there. He came up with this program because it's such a need, because as the housing prices continue to go up, especially first-time home buyers, they're having a real problem with this. So I want to talk about that a little bit, because let's talk about that $15,000 guarantee that you guys do, because nobody offers that. So if you can talk about that a little bit.
Yes. So let's step back to not as, well-heeled of a buyer, right? You've got your first-time home buyer. They are putting 3% down, and they are trying to compete in this market. It's very difficult. So our solution for that, which actually we've been offering for quite some time, but it's very relevant right now, the Protect Your Transaction program. What we're doing, just as I said before, walking folks through upfront underwriting, they're income, credit, asset qualified, and we're issuing the Protect Your Transaction certificate. What that is a $15,000 financial assurance that this loan will close. $20,000 for teachers, first responders, veterans, people that we consider to be heroes in the community. There's an additional $5,000. So I'm going to give you an example of how you utilize this, right? So you have your clients, okay? They have their pre-qualification letter. They also have the Protect Your Transaction. This is how you frame this up. So you presented an offer, and let's say, made up math, they're putting down $3,000 in earnest money, okay? What you can do with this financial assurance, you can assign this money to anybody you want, doesn't only have to go to the client. So as a tool for helping people get under contract and compete, you say, okay, Mr. Seller, I am going to purchase your home. I'm going to put $3,000 in earnest money. Okay. If this loan doesn't close, there's a $15,000 insurance. I'm going to protect myself. I'm going to keep $3,000, and then I'm going to say $12,000 is going to come in the form of a check to you from AmeriFirst if this transaction does not close on August 10th. Period. We've only written this check once, just to be honest. One time a check actually got written, which was great because it's really like, the best money we ever spent, because it proves that we're going to put our money where our mouth is. It really truly is a financial assurance on the transaction. And if you frame it up right and you're working, with a quality loan officer that helps you to do that, it should make your offer stand out, even possibly against cash. I've absolutely won offers where we were competing with cash because, of course, our figure was higher, right? Cash prices are lower than offers that have some sort of a contingency on them. So if the seller looks at it and they feel good about that, there's a financial assurance. Maybe they go with your client's offer, and that's what the structured transaction is designed for.
So I'm going to break that down into real estate terms for you real estate people that are paying attention. I look at contracts all the time. I represent sellers all the time. I don't handle buyers things. My agents do that. So when I'm representing a seller and we put their property on the market and we have 10 offers that come in, I'm always looking at who is the lender. I always put cash contracts separate from finance contracts, FHA separate from all. And then we're looking at basically a conventional because it's usually a more secure buyer. And so as a listing agent, I'm looking at that. And then I'm looking at the lender. Who's the lender? And then I'm looking at their pre-approval. Is it just one of those pre-approvals that's issued that anybody can get? It means nothing. Or has this buyer actually been fully vetted? And so what Helen is telling you guys is not only has this buyer been fully vetted, but they're saying they believe in this buyer so much so that should they actually miss closing or this file bust out because of that buyer, that they have this $15,000 insurance policy basically that is available to the seller.
Yep, absolutely. And we're in the business of paycheck protection for our agents too. So this is also, it's your protection as well, that all effort, the on average $1,000 that you spent in marketing to work with this buyer, we are protecting that for you too. Just to take it a step further, because we look at our home buyers as clients, but also the brokerages that we work with, they're our clients. You are the people that we service every day. And so it's important to protect that. And that's what this does.
It's super important because when you're dealing with a situation like this, when you may be looking at 10, 12 different offers, if there's an offer in there that is so solid that the lender actually is putting cash up, that's like a guarantee. Nobody can give you that kind of guarantee anywhere in our industry.
No, it's difficult to compete with right now. We say, okay, we're going to put a $15,000 check on it. If that doesn't work, we'll just buy the house ourselves. Yeah. We'll hear about financing later, right? So yeah, it's pretty great, to be able to offer that.
It is. So we've now touched on multiple different ways. And there's more programs than that, but I don't want to put too much information into you guys because y'all need to have a conversation with Helen to get more. But those are like some of the ways immediately that you can help your buyers win in this kind of a market and forever. Now, secondly, if you pay attention to Warren Buffett, if you've not heard of Warren Buffett, you should have, because he's like one of the richest men ever. So he tells you that when you're trying to build wealth in anything, you should have anywhere from 5 to 7 different streams of income. In the real estate industry, as a real estate agent, you're pretty much usually only basing your income on a commission from a transaction, whether you're representing the buyer or the seller. Well, that commission check, if you're an average agent, you only maybe get 4 or 6 of those a year. And so if that is you, or for any real estate agent out there, the only way to create even more opportunity to create income with a real estate transaction is to have another stream of income on that transaction, like squeezing all the juice out of the lemon. And so Helen's company, AmeriFirst, has a program where you, as the real estate agent, can actually have a second bit of income on that same transaction. So Helen, can we talk about that, please?
Absolutely. So you'll notice behind me, little billboard for Relo. This is our real estate loan officer program. Okay. What we have done, and the very first question is always, is this legal? So let's just get that right out of the way. Is 100% legal. We are going to compensate you for the conventional transactions that are referred to and then closed by AmeriFirst, by you, okay? So we, in addition to the commission that you would ordinarily earn, we're going to pay you what's called in our industry 50 basis points, okay? In English, that means $500 for every 100,000 in loan amount, okay? Up to $2,500. So for an example, right, if you have a transaction that is at $350 sales price, $300,000 loan amount, in addition to your commission, you're also getting a check from AmeriFirst for $1,500 for that loan that has successfully closed with us, okay? You will be, we'll facilitate and bring you through a licensing program. You do need your LO license. We are only able to compensate you on conventional loans if you're also the realtor on the transaction. So if you're working with an FHA buyer, it's illegal, so to speak, through HUD to compensate you for both. We can't. If you refer a loan, however, that's an FHA or via another government transaction that you are not the realtor on, so this would cover, for instance, family members that are buying refinance loans, you are able to be compensated on those. You cannot be both on an FHA loan. So just to kind of give you an idea, it could be your own transactions, but you also now are a licensed loan officer. Technically, we can pay you on the referring loan as a referring loan officer in other transactions.
So I know, and you guys, just so y'all know, here in our office, we are utilizing this, and all of our agents are in the process of getting licensed. A common question that we've been faced with is what kind of involvement as the LO, loan officer, loan originator, what kind of involvement does the real estate agent have? Are they really processing the file? How does that work?
Not at all. So the way we've set it up, in order to legally compensate you, your referrals, your clients, will apply on a unique URL platform, right? It's just a co-branded website. We use them all the time anyways, even for agents who are not licensed. And by going through that link, you have now been identified as the referring loan officer, okay? That's it. From that stage forward, my team is handling the loan just like any other transaction. There is no requirement on your part, and I would prefer that you don't start advising people on loan products and their financials. You don't need to get into those conversations at all, but you do also have the benefit. You have the transparency of being able to log into a loan if you see fit and see everything that's going on in real time, okay? If you decide to. Not everyone's going to want to do that, right? But you have that transparency that you would never have elsewhere. You can't log into your lender's software and see if your LO is telling you the truth, right? About when that loan was sent to underwriting. You gain all the transparency without any additional work other than facilitating and making sure the client applies on the right platform.
So number one, that's another way for you real estate agents to make some extra income, which is always nice. But number two, when you're representing a buyer and they're going with a lender, if you're not involved with that lender or you don't have a close relationship with that lender, you typically don't have a clue if you're actually being told the truth. Like, why isn't the appraisal done? Where are we in this process? Because those things can get super stressful and sometimes people aren't truthful. So with this program, like Helen was just explaining to you guys, if I was the one that referred Helen the buyer, I literally, and I have my reload funding certification, I am a licensed LO, I can go into that file and see if Helen tells me the appraisal has been ordered, has it? I can go check. I can verify. That way I know without a shadow of a doubt, everything that's going on is 100% true. And so for all you control freaks out there, that's a huge bonus.
That's why I mentioned that, because for some people that's very exciting.
Yeah. There's lenders out there that unfortunately don't tell the truth, and they drop the ball and they forget to order the appraisal, and it's like, holy crap, we just missed closing.
Yep.
And in this market, that's unacceptable.
Yeah. Oh, absolutely. You will lose the deal. I mean, I remember the days of it being very much a buyer's market, and if we picked up the phone and said, hey, we're not going to close till next week, you're not going to hear anything. They just sign that extension, and that's what it's going to be. That is not the case right now. You most likely are losing that house to a backup offer the minute that you miss that. I see sellers all the time trying to get out of contracts to take potentially a backup offer, and we know we have to execute on time or everybody loses. So it's not good.
Yes. Now, I know here in our office, because this is a new product to us, and so everyone's learning it, and everyone's like, okay, let's talk about this licensing. So they're asking, is it really state regulated? Well, let's walk through that licensing if we could, please.
Absolutely. So you will go through really what's a fraction of education that you have already succeeded in with your real estate license. You're going to go through a 20-hour course, which you can take online or in person in some locations. I'll throw that out there. There are places where it will only be online. They're not facilitating classes. You take the 20 hours, okay? I recommend that you do so in a focused manner, right? This isn't something that you want to have your two screens up and you're working and you're studying like an hour a day. You need to say, okay, this is what I'm doing Wednesday through Friday of this week. Sit down, focus, and then subsequently take your test. You will sit and take the actual LO exam for your national mortgage license. That's what you're obtaining. Once you have done so, then you'll be applying with your state for your license, wherever you happen to be. So you are going through the exact same coursework and test that any loan officer would. However, feedback is that it's easier than the real estate test. It's dry, it's boring, it's rules and regs of lending. It really has very little to do with what mortgage companies do on a daily basis. But just like in your industry, it's the same thing. You have to learn that and be familiar with the rules and regulations.
I love that. And so of course, we talk to people all the time about lending, and there are other lenders out there that are trying to hate on this product because it's a game changer. It's a disruptor. Yes. Why in the world would you not use Helen with AmeriFirst if you have the potential, A, to make extra money, B, to be in control of the transaction, and C, to have communication with Helen? She's like unstoppable. Her team is like spot on. So when you look at all of those benefits, when you look at people and companies that have disrupted things, they're game changers. People, other lenders may say to real estate agents that it's completely illegal and unethical for a real estate agent to be paid on a real estate transaction from a lender. Let's touch on that.
Absolutely. So as we stated, it is 100% legal to have this dual compensation, to have this dual role on conventional transactions. How we also, address this as a company is that if you're already working with a quality lending branch or loan officer, right, whatever their structure may be, we are regularly having conversations with large brokerages that we're bringing on who I would hope are already partnered with someone they perceive to be a quality lender, okay? Me personally, as a company, we very much believe in abundance theory. Obviously, we're looking to gain market share, but if I have the opportunity to walk in and say, if you have a loan officer that you have worked with for this amount of time and you trust them, let's have a conversation. We are looking to hire quality people as well. So it doesn't have to mean that it severs that relationship. If they decide to pass on the opportunity, that's fine, right? At least it's been presented. We are not walking in and saying, you're going to work with my loan officer or that's it, right? We're presenting this opportunity, and we're also saying, if you have a quality lender you want to bring along with you, let's have a conversation and see if they'd be a good fit for our company. So
I love that.
I personally really love that. I have a hard time. I'm just not a slash and burn type where I just come in and like it's a grab, right? So I really enjoy having the opportunity to do that.
I so appreciate you. So you guys in the real estate world, the average agent only sells 4 to 6 homes a year in a normal market right now. You know what? Here's the sad thing. I find it sad. 47% on a national level of real estate agents have not sold one home since COVID. So number one, if that's you and you're not selling any homes, that's sad. And we hope that you come and work with a brokerage that will actually train you and help you learn how to sell more homes. But number two, if you are only selling 4 homes a year, this is another way for you to add some extra income to you to help pay for your family. And then for you producers out there, like in our office, this is a way for you to really make some extra income. Because add up if you just did 10 transactions in a year, that extra $500 to $2,500 on each transaction, because that's what it is. It's not just 500,
right? And
then they go all the way to 2,500, right?
Yeah, up to 2,500. So that's a $500,000 loan, right? Yep. Based on this math. What we encourage and what we train and try to facilitate is saying, okay, let's take a step back, right? Instead of that $2,500 check being another vacation, what you are doing to compete, with all of the fintech that's out there, right? The only thing they have that you don't have is money. They are throwing money into marketing. That is how they're gaining market share. It costs you on average, statistically, somewhere around $1,000 investment for you to find a client, whatever it is you're doing, okay? if you were to take this money and reinvest it into your business, so then instead of one transaction next month, you have two, because you have enough money now to pay all your bills, right? And then you also have a built-in marketing budget. For every transaction you close, you go, yep, I've got the money I need to go out and find my next buyer. And once you turn that over, you go from being an agent that's closing 4 to 6 to being an agent who at least, is closing somewhere between 8 to 16, 18 transactions a year. And you haven't done anything different. You're doing whatever it is you do to generate buyers. You just now have the money to invest in it without taking away from your family, so to speak, right?
Absolutely. And for you guys who have been out there doing real estate sales forever, and like Helen said, you have a relationship with a lender, I would definitely talk to your lender about this opportunity and hook them up with Helen. At least let them have a conversation, because when I had my own independent brokerage open, I was happy. We were doing just great. I never was going to do anything different, but I saw an opportunity. I saw EXP, and I'm not an idiot. I'm a business person. I'm a business owner. And it's like Jay Kinder says, EXP opened the door where I basically used to have a Blockbuster, and now I'm with Netflix. AmeriFirst is the same thing. It's like, you guys who have these mom and pop lenders, and we appreciate them and love them and all, but unfortunately times are changing, and this is going to disrupt those. And so it's like, you either are going to get on the bus or you're going to get run over by the bus.
Yeah, for sure. We're offering the bus tickets, so it's just
yeah, it's a good one.
Just so that we don't overlook discussing this, okay? There's two streams of income with Relo. We've talked all about how you make transactional income, which we're all very used to, because it's how we make money, right? So in your industry, when we start to talk about residual income, that is highly unique, to have the opportunity to earn money on a closing that you weren't present for, okay? With the Relo program, in addition to the basis points you're paid per transaction, if you head out and you're telling the 2 or 3 quality realtors that you definitely know about this program as well, you are then, if they come through the program, they're now, Relo real estate agents. For every transaction that they close and are compensated on, you are earning $100, what we're going to call it first level, right? And then this trickles down 7 levels deep. And the bottom level number on this, this is taking just agents that are literally closing no more than 4 transactions a year. If you maximize this opportunity, that is a $750,000 a year increase in your income, period. And that is just you doing 4 transactions a year, and then you doing a good job at finding other agents who are also producing at that level and who are sharing the opportunity with them.
It's a no-brainer, y'all. It is such a no-brainer. And, there's so many people that have this limiting belief that, oh, this can't be real, and I'm happy where I am. Great. If you're happy where you are, okay, that's first of all, that we're happy for you. But secondly, this is life. This is a business transaction. You at some point need to think about how responsible you're being with your finances. And it's completely irresponsible of you if you do not look at other opportunities that A, can take care of your family better, and B, can provide passive income. Because let me tell you something, should you get cancer or something really bad and not be able to work for 6 months or a year, what happens to your finances then? What happens if you don't have residuals coming in? You're in a freaking problem, and this solves a lot of those problems. And things like this, as you see disruptors coming out, they don't go away. When they have a great product, you'll see copycats come out trying to copy them. Why? Because there's something to it. Just like the EXP model. EXP's got an amazing model. Now you got some other copycat companies coming out. They'll never be as successful as EXP. Why? Because the top producers are with EXP, and they're going to stay there because it's building an empire. Same thing with AmeriFirst. This is rolling out. It's a new thing. It's a great opportunity for people to get on the ground floor of it and build this empire. Because let me tell you something, that CEO is a visionary, and when he says he's going to build it, he is.
Yeah, he's going. Yeah, he absolutely is. He is driving the bus, and you can get on, or just you better get out of the way. And that is he operates.
You guys, for interest rate wise, Helen's got the same interest rates as everybody out there, or better.
Yeah, for sure. Very competitive. We have options for that. That is all. These are the minimum requirements of being a decent lender. Is to close a loan on time, to have good rates that are competitive for your client, so on and so forth. These are minimum requirements that you should be looking for. What we are presenting is an opportunity for you to have all of that, right? And create what could be for you a realistic exit strategy where you're developing residual income, you're earning more on every transaction that you close, and you're funding your own marketing budget. So that's what we are offering, not just to be a mortgage company. Anybody can do that. So this is a greater opportunity.
Now, Helen is located in Austin. I am in Houston. Of course, you don't have to be in Houston. Helen doesn't have to be right here next to me to work with me. Most of the time, we're doing everything remotely, but volume-wise, you're like, how can one person handle that kind of volume? They can't. So Helen is seeking help. Helen is looking for loan officers that want to have conversation, because this isn't like an open door, anybody can come. This is like, you have to be a good core value fit. And so what we're going to do is we're going to drop a couple of links in the comment section that you can find rolling out on Instagram, YouTube, and Facebook. We'll have Helen's calendar link there. We'll also have a link if you want to learn more about reload funding and learn through me. And so we'll put both of those in there. But this is an opportunity, not just in Texas, too. It's nationwide, not in all states. There's like 4, I think, excluded.
Utah, we are not doing business in. This does not work there. We will not be conducting the reload program in the state of New York. Outside of that, it's pretty open. We're piloting out in just 1 or 2. So technically it's 4. 2 will never be able to do this in Utah and in New York.
So what I would encourage you guys to do, whether you're a lender, real estate officer, whatever, is help us start building this company, get in on the ground floor and be part of this disruption, and have a conversation with Helen and see, is it a good fit for you? Because here's the deal too. Like, I've talked to several real estate agents, even in my own office, and they're like, yeah, I don't feel like getting my loan officer's license. I don't want to have to do the extra work or go through the schooling. Then don't. You don't have to. But what you can do is still use AmeriFirst as your lender. You don't have to get licensed, but you know then that you're with a reputable company that is going to disrupt the lending nation. And that's a great thing to be part of, because then you're secure. And they have that $15,000 loan freaking appreciation or loan insurance. Nobody can have that. Nobody offers that. And so that alone, you don't have to be a certified loan officer as the real estate agent to use that program. That's for any buyer and any real estate agent.
Correct. Yeah, that's a good point. Reload is its own ballgame, right?
Yep.
Everything else that we offer as a lender, that we are offering that to all of our clients. There is a distinction of what you have access to if you're a reload, participant or not. So that's just there and available. And some people see it and some people don't, and that's fine. I work obviously with plenty of folks that are doing nothing with reload. They work with us because of the other value that we have to offer that has nothing to do with their income. It benefits their clients more than anything, and that's fine.
Absolutely. And then a lot of lenders they have a really easy link to apply. Is AmeriFirst the same way?
Absolutely. So I have a course link for myself and my whole team. And then once you partner with us, are immediately connected with one of my business development managers so that they can assist you in setting up a co-branded link, making sure you understand the products that we have access to, making sure you've gotten on the phone with me, right? And we've just had a call, tell me about your business, right? What kind of clients are you working with? So instead of just this deluge of information on you, tell me about your business so I can say, okay, here are the things that we have to offer that I think will help you close more business and reinvest in your business.
I love that. She's really digging deep to help you guys build your business, to help you build income and create wealth for your family, and make sure that you stay in business. Because here's the deal, and I talk about it in my office all the time. We have disruption coming into our industry, in the real estate industry. We have big dogs trying to take our commission away and try to take us out of the game and make us glorified door openers. And so if you don't want to be a glorified door opener, number one, you need to make sure you're aligned with a real estate company that is innovative and forward thinking and disrupting things. And then you also need to have a lender that you're partnering with, and no better place than us with Helen.
I saw a sign on the way out of my own neighborhood this morning, listing sign, that at the very top says owned by Zillow, right? Clearly they went in, purchased that property. They're now listing it. They are most definitely going after your business, my business. And in order to compete with that, we do have to partner. This is not something that just the mortgage industry is going to succeed in disrupting on our own, or the real estate industry. We need that synergy of like-minded people who, like you said, want to keep us relevant. I don't know how to do anything else, okay? This is all I've ever done. So I need to continue to be relevant, right? Just like you guys.
Absolutely.
I'm not reduced to a bot that closes a mortgage loan for someone. So
No, and I think the more people that we can get together in our industry to bridge that, where like, yeah, not today, you're not taking us down, not today, not tomorrow, not ever. We're going to actually fight against you guys, and we're going to win because we're going to have better products, better service, and a heart. We really care about the consumer, and we're out there to make sure that nothing happens to them.
Absolutely.
I love this. Thank you for jumping on with me today, Helen.
You're so welcome. My pleasure, completely.
Definitely. So you guys make sure and reach out to Helen. We're going to drop her calendar link in the comment section. Make sure you get on a call with her. Her schedule gets tight, so be respectful of her time. Get in there with your questions, and let's make something happen together. Let's build relationships together. And she's always available. I can text her at 10 o'clock at night and get her.
I've done this a long time. I'm used to it. That's when real estate happens, is after 5 and on the weekends. So I'm not, 8 to 5 is not my schedule.
Awesome. Thanks so much for doing this today.
You're welcome. Thank you.
Bye, guys.
Bye.